Hi everybody, it's Mark again at TSLA, and today we have a little vindication in Tesla stock. It is up today. It is up to $266.44, which is a $10.73 increase over yesterday. Translated to a percentage, that's 4.2% up for today. So I would say we had some pretty decent performance, especially compared to other tickers, and we'll take a look at that in a second. But first things first, before diving into the charts, let's go ahead and take a look at the big news for today, and that was going to be the PC inflation report. So we'll switch over to the browser, and where's that tab? Here we go. On CNBC, the title says, "Key Fed inflation rate falls to the lowest annual level in nearly 2 years." An inflation gauge that Feds follow closely rose 4.1% from a year ago. That's the lowest annual increase since September 2021. By the way, that is also 0.1% lower than expectation. And we kind of talk about that when we're talking about, this is a year-over-year number, not the month over month. But we were talking about when it came to the core PCE, if we were to get a 0.1, 0.2 beat or a miss on that inflation read, you would see stocks react pretty positively to that. It wasn't really the only news that was driving the price of the market, because even before the inflation print came out, the market futures are up a decent amount just because of what we talked about yesterday being more clarified. And what we talked about yesterday was the Bank of Japan. So the Bank of Japan, they had their inflation read last night. Or their morning this time. Their inflation was unfortunately up. Their inflation is increasing, so they're really having to reconsider how they're handling their yield curve control, or the cap of the interest rate that they're putting on, especially for their 10-year bonds. So CNBC, this is also a CNBC article. It goes on to say, Bank of Japan loosens yield curve control, pledging greater flexibility. Now, they did want to make clear, and that's the Bank of Japan, that this is not a step towards normalization. They're still going to be essentially spending billions of yen buying JBGs to make sure that the yield is always kept in control. It's just that they're willing to accept 0.5% more in that rate. But even as of last night, our time, as they came out with this news and their yields on their JBG started to increase over 5%, 0.5%, 0.5%. I think it got to somewhere like 5.8, and all of a sudden it was, for some reason, it was already being bought back down. So I think this was merely, this is really just kind of like a showy move. This is not really something that they're not necessarily going to wait for the yields to get to 1% on these 10 years. I just don't see it happening, and they're not even saying that this is any type of capitulation to pressure from other markets where everyone else, like I said yesterday, is raising rates to combat inflation. Japan is actually trying to keep the rates exactly where they were, never change, just because, we talked about their structural problems in their economy. But since that was clarified and it wasn't as bad as what we thought it was, meaning that in a scenario that they just don't buy any more bonds, okay, meaning that they'll let their yields be determined by the marketplace, not by themselves. But they're actually controlling it by spending money, and I don't know where they're getting the money from, but basically putting themselves in debt and buying these bonds, creating a demand, meaning the yields will be kept in control. So the market didn't mind what they came out with. I think the reaction was pretty swift and violent at first. It was up and down in the futures market for a little bit, but finally, as the hours went on, people realized this isn't that bad. It's really hard for the market to really gauge how this economy could really affect the rest of the markets. But the reality is, if people find that JBGs start actually giving them yield, you would just find people in Japan and other institutions in Japan drawing down their foreign bond holdings, meaning then our yields in our countries would go up, meaning if the yields go up, bonds look more attractive, right? If bonds look more attractive within America, what if there's American investors say, you know what, I had a good run on Microsoft, I'm up 27%, I saw my Microsoft buy bonds. Maybe we get the 10-year at 4.2 or something like that in America. So that's the thing. Is so if people liquidate our bonds to bring it back home, it just means that there's more of incentive to be in a risk-free asset, kind of risk-free asset, in which are the U.S. Treasury bonds and bills, just because the market to some looks kind of toppy, and why risk losing your gains when you can just kind of sit in maybe some short-term bills for a couple months and see how the market plays out. As we know, and if you trade a lot, or if you don't know, August and September are really low volume. It's really it's not a great trade necessarily. This is August is a time where big money, they're out on vacation. They're trying to spend the last couple of weeks with their children before they go back to school in September. So you'll see kind of a lower volume kind of like regime happen for the next 2 months, as number one, people are on vacation. They're leaving their algorithms and their interns to run the desk. And when they get back, it's going to be like, okay, they want to kind of feel out, what the economy is looking like now. You don't even know if they're going to start buying, not really until maybe the end of October. So just as a heads up, as we end July, sorry, we have like one trading day left, I believe. As we get through the end of July and into August, let's say the scenario is that there is like a pump for the market up to the Apple's earnings. There's some earnings next week that are pretty big. I would take stock then, and I would not mean literally stock, but kind of take a look at your things and realize, okay, I had a good run on these things. Do I want to trim that down, or maybe keep them and sell very aggressive calls against them, meaning closer to the money than out of the money, or even further dated by a couple weeks? Something to think about as we get into the doldrums, which are August. Though we have been proven wrong. Remember May? Everyone in May was like, oh, sell in May and go away. If you did that, you lost out huge time, especially in Tesla. Okay, let's go on to next bit of news. So there was a determination by the National Highway Safety Transportation, whatever, NTSB, no, and NHTSA. I'm sorry, NHTSA. So NHTSA came out with a new proposal. So NHTSA said in this highlighted section of this article from the Detroit Free Press, federal transportation regulators announced a proposal Friday to boost fuel economy standards to an average of 58 miles per gallon for cars and light-duty trucks by 2032. A step likely to further advance the push towards electrification. Now, I just want to know that these proposed rules, okay, these are not going to be forcing people to not make internal combustion engines. It's just that they need to do everything they can with tweaks to engines or new technologies to make those gas engines more efficient or make them hybrid. And I think this is I wonder if this is a fleet average of 58 miles per gallon, not an individual car. Like all your offerings need to be 58 miles per gallon. That was something that used to be done a couple of years ago. But essentially what this is that the Biden administration is very, very much a kind of a climate friendly administration. And I think one of the easiest ways to tell that is their want and desire to regulate appliances and to make appliances either gas-free, meaning not running on natural gas, or to ban natural gas type of appliances in like restaurants and businesses, similar to like a gas burner in a Korean barbecue restaurant or something along those lines. That's a really strong push from this administration. And along with that, they carry that same outlook onto transportation. And we remember there was a couple of weeks ago when Tesla wrote a letter to the was it I don't know if it was the FTC, but they were writing a letter, maybe it was NHTSA, about hey, we want tougher regulations and limits on heavy truck or basically like 18-wheeler truck transportation trucks, freight trucks, having further limits placed on their ability to pollute the environment. Because of course they want to have more demand for the product, which would justify even the greater ramping of their semi trucks. And we know that you're having some difficulty with that. I think it's a battery ramp problem. But I hope, the Panasonic, the factory comes online soon. And I know they're switching to 2170. So they're going to have access to maybe some of those batteries, but that's going to take a year or so. But yeah, so Tesla's pushing for stricter standards, and all the other manufacturers like your VW, Stellantis, Ford, they're trying to negotiate with the Department of Transportation and make it so that those tough standards are lessened and brought down a little bit. And that's the reality when it comes to negotiations. Like you put out there something very extreme in the direction of what you want. So if someone wants to negotiate with you, they have to bring it back from an extreme, right? But the reality is the Biden administration, they were very, very much pro-environment, and of course, so is anyone that, follows Tesla. They know that Elon is very much all about saving the environment. He's all about solar energy and what have you. But this is going to be maybe another push for these stricter rules that are going to come around that would influence more people to be getting into a Tesla, just because the administration is forcing that, with the IRA. And of course, there's in democratic states, there are some very, very lucrative rebates for electric vehicles as well. Let's go over to our competition. So we talked about PCE. Let's talk about how Ford is doing. So Ford recently reported their earnings, and the earnings actually beat pretty well. But why is it that there was this big, 2% pump in Ford stock last night, and as of the open, Ford sold off considerably by maybe the same percentage. So maybe a 4.5-5% swing. So this is a video transcript of a Yahoo Finance video interview, and they're talking about how Ford, even though they posted some really good results and that they're selling more EVs, it's just that this article goes on to say the automaker now expects full year losses in the Model E unit, which is their Electrify unit, to $4.5 billion. It previously saw losses at $3 billion. So they're attacking on another, maybe $1.5 billion more in losses. They did reduce the loss per vehicle from 58,000 to maybe 38,000 for quarter over quarter, quarter one to quarter two of this year. But we're still talking about massive losses that we know they're not necessarily ramping up production of their vehicles enough that the volume would compensate and kind of bring the losses down to par. Jim Farley says further in this article, the EV adoption will be a little lower than expected. And we have to understand that when you're watching CNBC, you might be listening to Jim Cramer or Brian Sullivan, and they're saying, this EV adoption is just not going over well. I just don't think people want EVs. Maybe it's a coastal thing only. And they're not necessarily wrong if you just go more specific and say, okay, I don't think people want non-Tesla EVs. And I think that's what they can't say, because of course they're beholden to their advertisers who are very much burning oil all day long. So what the thing that we want to know before we read the next excerpt is that we like to think of EVs as Teslas. We love Tesla. We hold shares in Tesla. We follow whatever Elon says and what have you. But the rest of the world maybe doesn't see it that way. It's a very divided issue when it comes to the perception of Teslas and EV cars. But they said in this interview, they might want electric vehicles, but they don't want to pay what they see as overpaying or too premium of a price for electric vehicles. So that seems to be the crux of the issue here. Everybody from Ford to Tesla is up against it, but some of the automakers are managing it better than others. And that's the reality, is that, so Jim Farley is essentially implying, that their cars are too expensive. And that's why no one wants to buy them. But they did sell more EVs quarter over quarter, but yeah, essentially that's the feedback they're probably getting, is that it's just too pricey. And they're not wrong. Why is it that Elon says all the time, you can get infinite demand basically if you just make the things more affordable. And everyone's pushing against him and saying, look, we need to maintain our gross auto margins. We need profits up. And look, I'm not saying that's not true. I want that too, because I know if we ever post if we post 20% gross auto margin in the next quarter, okay, you're going to see the stock just explode upwards, because that would be most people they're not forecasting a 20% or higher margin. But what I'm getting at is, no one really faulted Amazon for doing what they did over the years of basically not making any money. And they're running, what is their P/E ratio? It must be like 5 times higher than Tesla's. Okay, they're not making any money at all. The only money that's being made over at Amazon is probably through web services, their hosting company and hosting division. So what Tesla's doing here is they're dropping prices severely. Okay, they're gaining market share. And we're not talking about market share from other car companies. That they're not the competition. The competition is always going to be the total addressable market of ICE vehicles. If you can eat into that, it doesn't matter who your competition is. Your job is to convert the masses to electrified cars. Okay, and we're still making money. Every other car manufacturer is not making money on their cars, and if they are like BYD, they're making like $5 a car. So I think we can do a quick comparison before we head back to the charts and just take a look at GM stock for today. GM stock is down 2.39%. And so basically they wiped out all their gains. Even though they posted good earnings, those are all gone. Those returns are all gone. How about Ford? How's Ford looking? Oh, Ford's down 3.5%. 3.5% from $13.99 at the close from yesterday. So basically, all the week's gains are gone, and it's a 4.6% loss for the week. Look, it's not like I want Ford to do badly. It's just that I think if you believe that the future is going to be EVs, and you're still making hundreds and hundreds of thousands of internal combustion engine cars, you still have research and development slated to make those engines and those cars better. I just don't think you have a future. And especially consider this, in a world where Tesla is being beaten down from all corners, from all sides, in the sense that, Elon Musk is running the company to the ground. They can't make any money. No one wants to buy EVs. These EVs are dangerous. Full self-driving is a scam. Yet, if you are an investor, does the future look rosier for Ford, GM, Stellantis, or Tesla? And I think with the outperformance today from Tesla, compared to a severely outperforming Ford and GM, I think it says something when people start to realize, okay, these guys are just losing more and more money. Okay, GM's talking about bringing the Bolt back. That was a stupid idea to even discontinue in the first place. I understand, though, is that they didn't want to keep building it because the way they're building that car before, it just wasn't advanced enough to make real good money on. They need to swap over to whatever their Ultium, Ultify, whatever design, or like maybe just the skateboard that they were designing for other cars. I don't know how they're bringing that into the Bolt, but let's say they Ultify their Bolt. Okay, that's what they need to do in their mind to save on costs, make it actually ramp it in a way that is profitable. So I get what they're doing, but it's like, that was your number one selling EV and you canceled it. Now they're probably rethinking the whole like $87,000-$90,000 pickup trucks and $100,000 Hummer and all the EV variants. It's just, they don't got it. Like, because they figured that, look, if we electrify the cars that are a little bit more expensive, maybe we can charge a little bit more money for them because people think I have to pay more for EVs, that they'll make a little bit of money. But the reality is they're not going to make money if they're going to go that route. They're not making those numbers. They're not making enough of those EVs in mass. There's no market for it. Why would people want to pay so much for an EV? They're not going to get a rebate from their state or from the government, for the federal government, for those type of vehicles at that price point. Yeah. So it's good to see that. I think today was a day where, we had clarification on the BOJ, the Bank of Japan. We had some clarification on inflation and a good result on inflation as well. Inflation's coming out a lot. And we're seeing how the market is responding to good earnings from Ford and GM. It's just that, look, your earnings for your ICE vehicles, that's all well and dandy. You made $2 billion Ford. You lost 1 point something billion making EVs. We know that if the Democrats stay in power, like if the Democrats win next year, like, do you think they're going to, be more flexible on their emission standards? No. If Joe Biden wins the election, he's going to go, and this is what happens in all second-term elections for presidents, they're going to go all out on their agenda. And if he wants a clean environment, these companies, Ford, Stellantis, VW, GM, what have you, they're going to have a big problem because they're going to be going up against a government who hates the idea of oil existing on this planet, which kind of happens to be good for you and me because, look, they have the same subsidies that Tesla does. It's just that they just don't believe. And maybe they believe now, but they definitely haven't been believing to really go all out and convert their company to electrified vehicles. Okay, so back to the chart. Looks like Tesla's at least a little bit positive after hours at the time of this recording. So the Tesla price action is not really following. It's just consolidating. So I'm gonna go ahead and just remove these little drawings so they're not being really followed anyways. But the idea right now is that we had a good day, but it's only a good day in comparison to yesterday. Because if you look at yesterday's number, we were actually higher yesterday. Yesterday, our high was $269. And today we close at $266.53. So it's good that we went up today, but the reality is this is the same price it was over a week ago. Like the day that we were dropping really hard on earnings, which was a Thursday morning, Thursday afternoon, that's the same price we're at right now. We didn't go anywhere, and so there's no definitive movement on what's happening with Tesla. Let's go zooming out on a 1 hourly. That unless we so we drew this crude head and shoulders pattern on this diagonal. We also talked about how this could be in head and shoulders depending how the price action develops here. I think if you see by middle of next week, Tesla knocking at the bottom of the gap, because we're gonna have Apple earnings and stuff like that next week. So let's draw a quick line. So this is the gap. If you can get Tesla's price action to mosey its way up past these local highs at 273 and kind of go up into the gap and find some support here like that, I think you'd be in a good position to say that on the shorter time frames that our trend is still maintaining. We're not reversing the trend as of yet. I think if you were to find ourselves in this gap, I would pretty much saying that we topped out. But even at this, if we were to settle above the gap, just know then you can put, it's not completely over. We would need to close the gap. If you close the gap, that's bullish. But that's a tall order. That's a 290. But the reality is we're at 266. That's not that far for Tesla if things go really well. Let's draw out a head and shoulders pattern on a larger time frame that we spoke about. And you can see that even if we get into the gap, that not necessarily are you in the clear from a technical analysis prospects. So we would draw something out like that, and then you would draw out something like that. And that would be, if you reclaim the gap area, if you break into the gap by the middle of next week, it's good on a shorter time frame, but on the hourly, on the bigger time frames, we're not in the clear until you close the gap. Now, there's arguments to be made as well that, once you close the gap, at least you clear the balance and you can go down or up. And it's true. Sometimes the market just wants to be efficient and just get that settled, so you don't have to worry about it later. But as we saw from last year, that wasn't necessarily the case for most stocks. When things were selling off, we weren't closing any gaps above. Not at all. So let's go back on the lower time frames though. So we're back to the minute. And so we gapped up in the morning, and it was actually a very conservative gap up. Let's measure it out. It was something like, oh, sorry, I don't know where it went. So 1.5%. And just to let you guys know if that's good or not, NASDAQ closed up 1.82%. So in the morning, it was like, oh, it's kind of okay. But it developed really, really well. I think if you look at the price action for Tesla, it is very, very bullish on the daily, for the day, I'm sorry, compared to other stocks where they weren't closing at the highs. So if you were to overlay, this is the NASDAQ Tech Index. So let's go ahead and just overlay Tesla. And what we're seeing here is that, yeah, so we kind of gapped up and kind of arrived at the same point, right? And that's why I mean it's conservative. It was like the index is up like 1.6%, Tesla's up 1.5 something percent. And I was telling myself, I'm like, okay, let's see how this develops. Because I had a call, okay, sold against my shares. And I really wanted to get out of it as my only trade for the day. Hopefully that doesn't bite me in my butt. Okay, so, and you're seeing here how Tesla had a lot more buying as the morning went on, and then it sold off more severely than the other names. And it found itself a base still above the gap, okay? Still above the gap. I think if you look at the SPY, yeah, it looks very similar to QQQ. Okay, so it sold off pretty severely compared to other names. And I was thinking to myself, like, that's not great, okay? But we weren't in the gap, okay? So I was okay with that. The gap, if we were like selling off into the gap, I would be kind of like, about it. As you can see here, it didn't get down to the gap. Now, if you have a call sold against your shares, how do you know when to get out? Well, I use that as an opportunity to get out right here. As it kind of based and started getting some bids, I closed my calls here, and I was willing to reopen the call if we got to the gap. If we were to fall to the gap, I would have sold another call and kind of be out a couple bucks. So I closed it right there as my only trade. I didn't want to go ahead. I didn't want to buy any calls because, I didn't want to buy any 0 days to expiration calls. I didn't want to buy a 1 week out call over a weekend because, yeah, the theta would destroy me. So I closed the call here and kind of wrote it out, and it worked out pretty well. But you're seeing that, going back to Tesla, is that we actually made higher highs during the day. And we closed pretty nicely as well. I think we would have closed higher. It's just that they didn't want to go above the 267.50. They're willing to compromise and just close and pay out the 265 calls. Now let's go over back to the browser. Let me see if I have a tab open with the open interest. Okay, so here's the Max Payne site. And as you can see, like we were talking about, I think yesterday, calls, I mean, the highest amount of calls for a strike was somewhere around like 180,000. And now within the day, it was getting bought up severely. So the 265s overtook and became the call of choice. So $255,265 strike calls were paid out today. Now, if you ever use this site, and I recommend to use a site like this or any type of site that kind of tracks open interest on the options chain for the ticker that you like, Tesla for us, of course, is that it kind of gives you an idea where the market wants the price to end up on a day like Friday, which is expiration days. And as the day goes on, since the calls and puts are relatively cheap on the day that they expire, you'll see a lot more people buy a lot of these calls. And as you see here, the puts and the calls ended up being right at the same strike as far as where the market was interested in getting the price to move to. So when they're on the same strike point, it makes it a little bit harder to determine where it's going to be, because typically you'll see peaks that are like off by a couple dollars. In Tesla's case, you might see the peak be at 265 for calls and the volume peak for the puts at 260, but they're right on top of each other. And you can see here there was a lot as well building up at the 267.50. So the compromise was, I'm not going to pay out on the puts, okay, but I'm not going to pay out on the 267s. And so when it got to 267, let's switch over to the chart, and we'll see how 267 lines up for us. Let's look for the 267. We'll draw. Okay, it's basically where the blue line is. So the 267 was really well defended. They didn't want that to happen at all. I think on this on this peak right here. Okay, yeah. So here, if you're watching the price action for today, and you saw this over here at 12:30, that was a quick sell-off. Once it touched 267, the people were like, no, we're selling it, and it sold off really quick. So they kind of gave you an idea of how this is going to work out. They did not want 267.50 to happen, and they used this opportunity to build up. And if you just watch the volume on these calls, as this was selling, especially towards this low right here, as it was selling, they were buying calls like crazy. Now, by the way, when it comes to TA, and when you draw lines, sometimes they hit, right? This was the high from the morning before the sell-off in the morning into this inverse head and shoulders. Okay, look. When you get a local high, just kind of, if you're charting, just draw a line. And if you're seeing price sell off and it bounces off, that's real bullish. That's super bullish. And to the point where this peak, we took it out. We got through the 267 pretty strongly, and there was a rejection like 1 minute later. But what we're saying is that the interest is there. People are wanting to buy. And this chart looks so much more convincing than other tickers, even like the likes of an NVIDIA, for instance. Like, look, here's NVIDIA. Let's overlay Tesla on the king that is NVIDIA. Oh, yeah. I mean, much more performance, higher lows every time, right? NVIDIA kind of made like a lower low, but it doesn't really matter. NVIDIA just had a good run. NVIDIa's not, no one has a problem with NVIDIA. People have some issues with Tesla, but as you can see, higher lows. Chart looks good for the day. Looks really consolidation-ish on a bigger time frame. But you saw with the options chain, it's like there has to be a compromise. If the put interest was the exact same strike as a call interest, they might just go above the put and just buy some calls for themselves and just close it out there. Would it be surprising if it closed at 264.90? No, but that wouldn't have been a big difference. It would have been like $1.40 per share difference. And so that's what I mean. Like, so when it comes to the Friday expirations or the monthly expirations or the quarterly expirations, really keep an eye out and watch how the options are flowing into whatever strike is close by. Use that as a way to either don't trade at all, because look, if you're buying calls thinking you're going to break out above 267 at 12:30 in the afternoon, it just wasn't going to happen. But if you're watching the options chain, there was just too many calls at the 267.50. It just doesn't make sense. They already gave up the 265, right? They consolidated on that for a good while. But if you look at the 265, it's actually not badly. It's not actually badly defended, right? And I'll make it a different color so it's easier to see. But should I not make it fuchsia though? Maybe not. Well, it's there for now. It's green. But you can see that 265 was being defended. So the interest was, the people that had those 265 calls were probably the people that were driving this price. And we also talked about the 270 puts. I know we paid out on a lot of 270 puts. Let's switch back to the browser and see how the 270 puts did. Because even though there was a lot of them in the system, I wonder if there was a good amount still. Not a lot of interest on the 270s anymore on the open interest, but let's look at the puts. Wow, there's really not that many. So no one was buying 270 puts. The The hot one was 265. Unfortunate. But all the 270s got paid out, and there was a lot of them. There was a lot. So I think the market makers won. I think the market makers were all the owners of the 270s. We saw those earlier this week. And I think they also started buying 265s today. It was just skyrocketing as the day went on, especially on the dips. Those calls were getting bought. Those are super aggressive as well, because the put to call ratio, there's definitely more calls in a larger way than the puts. So they kind of knew what they wanted to do. They wanted Tesla to go up today. But don't rest on your laurels. We don't know what's going to happen next week with the big earnings, like Apple really driving the market now, with the Fed meeting out of the way, with the PC inflation report out of the way. Everything looked good in that respect. Bank of Japan kind of threw a wrench in the works, kind of just wasted a day, really. It didn't really accomplish much because we kind of closed near the same price for most stocks from the Thursday. Switching back to the chart, yeah, I really don't know if there's much else to talk about. Let's clear out these. Let's clear out the drawings for now. Let's look at what we want to do next week. Just real quick. So on this blank chart for Tesla, if you want to protect your downside, now, first things first, I would say if you're just to look at this price action, don't look at the run up into earnings. Just look at the price action for the last maybe 5 trading days here, from the gap down essentially. And you're seeing this pattern kind of work itself out. In any context, you could say what? You could say that we found a base. It's been tested 3 times, which is 256, 255. You had it dip into the 253.92 area and got bought up really quickly. You can say that was like a spring. You can say this is a back test. This tested that same area that stemmed the falling. We were falling pretty severely until we got down to 255.96. We got there again yesterday, 255.760, and we kind of bounced off that again. We're back at the same level. This is a big area of interest. If I was to draw a box for us at the price that around where we close, just kind of generally in this area, if I can get the rectangle. So let's see again. It's something like that. Bear with me. So we're here. So we're basically at the bottom of the range where we found this nice base. If we can close in within 2 days, what is that move going to be? 2.3%. If we can close above this local high, so if we get above this, let's draw out potential price action for that. If we can close above 273, something like that. Something like that. If we can get that by Tuesday, I'd probably sell a call here and hold it for like 1 or 2 days until we get some clarity on Apple. What would be a move to the bottom of the gap? So if we want to get to the bottom of the gap, that's going to be 5.39%. That could be 3 or 4 days if things are bullish. And it depends on how that kind of closes. Are we closing into the gap? So let's draw again. Let's say we do something like, if we can, and we close above the gap, I don't know if I'd sell a call. I don't know if I'd sell the call. If we get into the gap, close into the gap, I would feel that you'd find a little bit of selling, but not too much. And you would kind of zoom past it and close it. And that really depends on the state of the market. If it's really, really bullish in the sense that Apple has good earnings, like maybe AMD has good earnings, and just things look generally good, I think we'll have like a little vacuum of news economic drops or like Federal Reserve meetings. We'll also get back the buyback window. So I think around the earnings time, you can't, as a company, you can't be buying back your stock. And we have, for many companies, the mega caps especially, they have like a couple of $1 billion that they can spend if they want to buy back shares. And they can start doing that again soon, maybe next week, if not now. So you can see a little bit more buying. But like I mentioned, once we get past the first week of August, we'll do it together. We'll kind of take a look at the market and see, okay, we know that we're approaching a very more volatile on average and lower volume kind of area in the calendar. And what do we do with that? Is there any potential Tesla news that could make Tesla diverge, kind of like how we did today, from the performance of the rest of the market? Like, we can use that maybe to our advantage, because when things start bulling really hard, stock picking becomes very, very important, right? Would you want to ride Carvana from January 1st until now? Or would you want to ride the index, the SPY, from January 1st until now? Obviously, Carvana went like 1,000%. Okay. When things are rapidly falling, I'm very comfortable just buying like index puts to hedge or to day trade. Buying individual names isn't necessarily all that great, because sometimes you want to have the volatility of a closer expiration to your puts. And indexes like the SPY and QQQ give you that flexibility, or even this SPX or the futures can do that for you as well. All right, guys. I want to see this next week. If Apple does a really bad job with their earnings, it will drag the entire market down. And then we look towards what we've always looked towards, which is going to be the top of the gap that we left behind. And then if we fall right through it, if you close that gap, I think we fall all the way through. Like, it would be an all the way through fall that won't stop for like $50 strike. I mean, $50 on the stock price. But what would that look like if we were to do a quick drawing? Let's see. Let's say we kind of get through Monday rather okay-ish, and then the week goes on and earnings come out, and it'd be like that. So let's not see that. Let's see the other thing. And have a great weekend, guys. Thanks for listening. I appreciate it. Bye.